What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we are going to be taking a look at the charts. We're going to talk about something most people don't talk about. This is going to be a very quick video. This is what you look for in the possibility of a bear market, which I do believe we are in right now. Let me explain a few things, then we'll move on to the smaller time frames, take a look at what's going on with Bitcoin, and go from there. Before I begin, if you guys haven't subscribed to the channel, make sure you subscribe, tick that notification bell. Scroll down, smash that thumbs up, and leave your comments in the video. So let's take a look at what's going on. As you guys know, I've been watching this Amazon compared to Bitcoin chart, which still is holding up as valid. As you can see, in a bear market, when you have a big drop, everybody down here wishes they would have sold up top, and then it starts going back up, and then everybody gets extremely bullish again because it's going up, and they don't get out. And then it happens again and again and again and again. And that is how the bear markets are formed. If you haven't been in a bear market before, you will not know this. And even some people that have been in the bear market before still don't get it because they don't believe in technicals. They only believe in hype and euphoria and all that good stuff. So as of right now, we're still getting rejected at our 55 EMA, just like we have over here. We've talked about it before. A weekly open and close above this 45,000. That's a weekly candle open and close, the same candle above 45,000. Then I will play with the idea of possibly getting bullish in the macro. But until then, I am remaining bearish. You want to look at the bullish stuff? Literally watch any other channel, because if Bitcoin pumps 20 bucks, they are bullish. Anyways, so as you can see back here, we had this pump. It was 35%. This one here, same thing, about 30%, 28, 30%. Everybody wished they would have sold up here when it comes back down here. Then it gets back up there where they wish they would have sold, and they don't sell again because they believe it's going to continue up. Also, if we look at the RSI here, we've talked about this last couple weeks. It came back up and retested this trend line the second time, right where we are right now. If we close the weekly around this range, I think it would be a good thing. We'll probably bounce around for a little. Obviously, we got more time for the weekly to close. But I would like to see this get rejected right at the top where we're at now and then continue down just like it did over here. Would make a lot of sense. As you can see, the MACD is also looking just like it did back here. Same type deal. Let's go into the weekly. So this is the weekly chart we've been watching. We know the bottom of this pattern, this rising channel, is around 33.9, 34,000, give or take a couple bucks. As you guys know, I believe if that breaks, we're going down to at least the mid to lower 20s section. Nothing has changed there. I have no reason to look at anything any different. Again, if we get weekly candles to open and close above this 43 to 44 range, open and close, then we can start looking at going up to maybe to test the midsection here in the mid 50s. But until then, it's still not looking bullish. And as you can see, let me get this trend line off here. I don't know what that was. But as you can see here, this is what I was talking about. We've talked about this for the last over a month now. We got rejected here, came back down, just like I showed you in the Amazon chart. Last week, we were way up here in the RSI, and we still closed below. So remember, the RSI follows the body of the candle, not the wick. So we have to see how the weekly closes to see where we're at there. Let's take a look at, this is the daily chart. This was our 1, 2, 3, 4, 5 ABC correction, was an irregular correction, and then coming back down now. Our measured move of this falling, broadening wedge is that mid to lower 20,000 range. Now, as we talked about yesterday, right here, this triangle forming here, a few different ways I want to look at this. So pay attention, guys. I do think this is most likely bearish, and we do have our targets. First target being same thing, lines up at that 23.3, unless we break this 45.2. But even if that breaks, we could get a wick up higher and still be bearish because we would just clone that bottom line and you still get just a rising channel here. That top would be around 47.7. That could be a good fake out wick to fake everyone out, come back down. But once we break this bottom trend line, then we can make our measured move to where we go from there. But we've looked at this a few different ways. Looked at this as a possible bear flag, and the bear flag would get us down to, depending on if, when, and where it broke, somewhere between the 3,500 and 9,000 range. We do have our major supports right here marked in red. I still believe we're bearish, guys, unless we start closing candles up there where I was talking about. Be careful. I know all the bulls are going to get you extremely bullish, and we're going to the moon. Blah, blah, blah. Same thing as always. And people always want to talk about, you know, they were right. They were right. Well, don't forget, we were at 69,000 and they were telling people to buy there, saying we were going to 100,000, 260,000, 330,000. Same thing they were telling them over here before this drop. Be careful, guys. All right, let's look at the Dow Jones. So as you guys know, on the Dow Jones, I do have a target of 30,900 points from breaking this wedge here, unless we start opening and closing dailies above the 34.3 range. If we start opening and closing dailies above there, then maybe, you know, we get another push up for Bitcoin. But until then, it's still looking like it's headed down here. As of right now, we got plenty more room for the downside. If you guys are interested in trading before I go into the smaller time frames, definitely check out Primexpt. By far my favorite exchange. They don't trade against you. Definitely at least give it a shot. There is a link down below in my description of this video. There's also a link down there to my Twitter. Also our Discord group. Check it out. If you don't use the links down below, you're getting the scam me on Twitter. There's a lot of fakes on there and stuff, guys. So use the link below if you do want to follow. But anyways, on here you can use the contest section. You get free money to trade without having any risk. So you get to know how to use the platform before you do. And then if you get a winning strategy, maybe put in a couple bucks or whatever you wish, depending on your financial situation and all that. You can also trade a lot of altcoins on here. Forex, gold, silver, oil, S&P, pre-markets, everything, all from this one exchange. Definitely check them out. And if you go to my YouTube page, there is a tutorial here along with some other ones, but the prime tutorial will tell you where to put my promo code SAVVY50, which will get you up to a $7,000 bonus. SAVVY25 will get you a 25% off of your fees. All right, let's look at the 4 hours. So the 4 hour, I have this count, this 5-wave down structure, possibly topped out here. We're going to zoom in and look at other possibilities and invalidation points. So to invalidate this, it would have to break. Let me put a trend line across here because wave 2 can actually retrace 100%. So if we do not break this, it remains valid. We put a price label on it. So if we don't break this area at 45,470, then this is still valid. We could go up a little bit higher. We'll talk about that. But as you can see, there were 5 waves here. You can see in the blue, 5 waves down for wave 1. Then we had an ABC up for wave 2. And this is wave 1, 2, 3 down to possibly 29.5 area. Then we get another bounce back up to the 32 range, and then back down to around 27,000 for wave 3. Another bounce for wave 4, and then wave 5 down to that lower to mid $20,000 range that we've been talking about. Now let's zoom in a little bit and see. We get this stuff off of here. Let's put the Fibonacci retracements on here. If you know anything about Elliott wave, usually retrace to the golden pocket zone, which we have hit and seem to be get rejected right now. But if we do go up higher, the next level I would expect to see a rejection is in the 46,660 area. That could still mean wave 2, and then we're still in wave 3 of 3. So this is 3 waves down, which will have 5 waves within that, like it looks like we're getting. But anything above this, then I would start to be very cautious. It's very rare that we go up and retest the top of this again, but a lot of people are thinking this is a range, which is quite possible. Either way, it's still looking like definitely some bearish momentum here. We had a very, very, very strong wave down and then a correction wave up. Most likely going to get a very wave 3 will be much much stronger than this little wave one here. So that's what I'm looking for. I'll keep you guys updated on that. Let's take a look at the Lux Algo Indicator, which also there's a link down below. You get 20% off using my link. So right now on the Lux, we're going to look at it on the daily. Its major support is 37.1, major resistance 30 or 45 to 30. So would line up with possibly going up to retest that area again, although I think it's less likely. It's definitely a possibility. If you guys are interested in checking out my wife's webpage, that's also down below, anchorimage.com. She does it all herself. Quality stuff, guys. Definitely check it out if you haven't already. Thanks again for watching. Don't forget to subscribe, smash that thumbs up, and leave your comments down below. Also, share the video if you want to. Thanks.